I'm still in the camp as of now, Bitcoin. And again, this might sound crazy to some people, but I'm still not in the camp that we've put in a low. I don't have the factors in place on a chart that tell me that the low is in for this entire cycle. And the main reason for that too is if you zoom out on the chart, right? If we look at this bigger picture, this again is a nice bounce. It's a fantastic percentage-wise bounce off the lows. But again, we haven't even recaptured this area here. And this is kind of my line in the sand. This Yeah, I mean, I think the big question is as we're coming into this Wednesday's Fed decision is what's the Fed going to say? What are they going to do? I'm in the camp for a 25 basis point hike. I think that considering less than 2 weeks ago, Jerome Powell was mentioning he might have to do 50 basis points. I can't imagine them going to zero unless the banking situation deteriorates so much more than it already has. So I'm in the camp for 25, and then I think they'll actually calm the markets by saying, hey, we're going to wait a while here. Let's see what happens, and we're going to stop the rate hikes after this one. Yeah, I mean, that's a good question. I do think it is a breakage. It is kind of a warning shot from the financial system that things have gotten very tricky. And again, I do look at it as a break at this point. You know, if he continues to tighten, it's only going to get worse. I mean, we had Goldman, JP Morgan, Citi, Wells Fargo bailing out FRC with $30 billion, and the stock's still tanking even after that. And you're still seeing Pac West drop and on Friday and stuff. So I mean, you know, the question is too, is the crisis even over? Is there risk of contagion? I think that's got to be the big question. Could this deteriorate further out of control if the Fed keeps hiking rates? Like for me, I look at it, and this kind of drives me nuts, is that if you're the Federal Reserve, you should have your finger on the pulse of the banking system, right? That's kind of your job. And so the question is did they see this coming, or were they blindsided by this? I mean, it certainly seems like they weren't really ahead of this issue. And so to me, it's another issue of does the Fed really know what the heck they're doing? I mean, they said transitory. It wasn't transitory. They jacked rates up to try to, you know, curtail inflation really quickly. Did they not see that this was going to have some consequences behind it? Let me bring up my charts here. We'll take a look. So what we can see here is that this is the S&P 500 chart, right? And so we've basically been, and I think people don't kind of recognize this, but what I've seen is that since really June, the markets have been in basically a chop fest, right? We've just been going sideways here. And so one of the things that I saw recently with this banking crisis is we actually broke below this trend line that's been sloping up. So to me, that's getting my attention. I want to see, do we rally next week? Do we retest that line, maybe get above it? But right now, I do think the markets all are vulnerable. And I still have it priced in that the second half of 2023, I do see us not only retesting the lows from October, but then starting to actually go down to some of these targets, maybe even as low as 3,000. So I'm in the camp where I do think that we're in for a recession. I think that, you know, anyone who says we're not, it's going to be some soft landing. I mean, again, show me a place where the Fed has hiked this quickly, this fast, you know, with this dramatic rise in rates. And I can't imagine us getting away with no recession whatsoever. So I think investors in stocks have to be aware of that. And I think if you factor in a recession, even a mild recession, valuations to me are still way too lofty in many of these names. Yep. No, and I think that's a good point. And not only has money now rotated over the last, you know, few days into the NASDAQ, but also crypto. I mean, not so much the altcoins, but Bitcoin and Ethereum. This is like their first test case in a long, long time, right? Their first banking crisis since the inception of Bitcoin. And you've absolutely seen a huge amount of money roll over into cryptocurrencies, specifically Bitcoin and Ethereum. And I think that's fascinating. You know, you think about the reasoning behind the creation of Bitcoin, and here we are. I mean, this is just one of those use cases for it, and I think it adds credence. You know, I'm still not in the camp where I think that necessarily the lows are all the way in on Bitcoin or Ethereum, but you can't deny that this just strengthens the case long term for why we need Bitcoin. And that's part of my issue with why I just can't see that the markets have fully bottomed, because you still see so much speculation in the market. I mean, people are just itching for 2021 all over again, like a drug addict, you know, they're scratching at their skin, you know? So yeah, I do think that it's at this point where, like, investors got to still be very wary, right? The Fed isn't going to, number one, the Fed's not going to just go to cutting rates, right? They're not going to, you're not going to see this all of a sudden, this massive pivot where interest rates miraculously go back to 1% on the Fed funds. I mean, it's just not going to happen in a long period of time. Now, are they going to finally pause? Yeah, I think that makes sense. Maybe drop rates by 2024 a tiny bit, but I just do not see them dropping rates all the way back down. And if they have to do that, the economic situation is going to be ridiculously horrible for them to do that in. Another amazing question is that, you have the automation factor, you have the robotic factor, you have the AI factor, and you can't help but wonder in 20 years from now, is there going to be a major crisis where we've had so many jobs replaced at that point? And the other thing goes for housing too, and this is something that I've speculated on, is that in about 20 years, you have the baby boomer generation that starts passing away quite, the huge amount. And a lot of that generation, they own 1-2 houses, right? So all of a sudden you have these massive onflow of housing potential, like amounts. And I do wonder about the housing market in 20. I mean, it's a long way off, but for me, I love this thinking about that stuff and thinking about what could happen. Yeah. So I think it's partial, right? So you have the Fed potentially, instead of a 50 basis point, which prior to last weekend we were kind of thinking about, now all of a sudden 0 or 25, and obviously most likely a pause after that. And then also, I think that there was this massive amount of money that flowed from bank stocks and the markets into Bitcoin, which helped push it up like we see it on the chart in front of us. And so I think it's a combination of that. I do think that once the banking situation calms down, you do see some of that money come out of crypto in terms of Bitcoin and Ethereum, but it certainly was part of that. And we saw it in gold, right? I mean, gold has had a massive run up as well. And if we think about it logically, just, the Fed going to 25 or to 0, it's not like they're dropping rates. So it doesn't necessarily tell us that gold should be ripping north of its all-time highs, but we are getting pretty close because of some of the money flow, the people taking kind of a protective measure here in these assets. So short term, it's looking likely that we could retest this 28,500 area right here, which again, interestingly enough, it was your lowest point from 2021's midpoint of that cycle, that bull cycle. And it's also this low of the consolidation right here. So that's my short-term resistance right around 28.5, 28.6. If we can pierce that, then we go right to that even number of 30,000, which was right above it right here. So I'm in the camp where if we get there in the next few days, let's say by Tuesday or so, I will be actually looking to short Bitcoin at that point, considering how extended the short-term move is here. Also considering that I do expect some of the money flow that's gone from bank stocks into crypto probably does reverse back out. And remember that, in a short-term amount, people are hiding in Bitcoin, right? It's, I don't trust being in the banks. I don't trust my deposits in banks maybe, but there's also a lack of trust in crypto where you don't know the regulation yet. You don't know all these different things. So you could have this yank of liquidity or money flow back and forth in these two asset classes. So it is an interesting thing to watch, but either way, I do believe that we'll pull back if we hit that 28.5 or 30,000 level. I'm still in the camp as of now, Bitcoin. And again, this might sound crazy to some people, but I'm still not in the camp that we've put in a low. I don't have the factors in place on a chart that tell me that the low is in for this entire cycle. And the main reason for that too, is if you zoom out on the chart, right? If we look at this bigger picture, this again is a nice bounce. It's a fantastic percentage-wise bounce off the lows. But again, we haven't even recaptured this area here. And this is kind of my line in the sand, this 30,000, 30,500 level. So as long as we stay below that, I'm in the camp that we still can roll over. We can still maybe make new lows. I don't think, for me, it's not so much that Bitcoin is going to have another FTX scenario necessarily. It's more to me that I do believe the traditional markets are going to have a major drop. And if that happens, I'm still in the camp that Bitcoin is going to struggle as it will spread. The kind of the panic and the fear will spread across all asset classes. Maybe not so much gold, but even gold could see some selling. Right now, it's been a trader's market. I think last weekend or last Friday, I was going long Solana, Avalanche, Polygon, I was long a Bitcoin and Ethereum, and I rode them up. I sold most of those kind of midway to 3/4 of the way up, kind of towards this upper trend line. I've now started a small short position in Ethereum, but it's only 2% of my portfolio. So it's kind of just dipping the toe in the water. But if we do get up into this range, then for sure I'll be looking to add to those and start accumulating a bigger short position. Now, remember, for everyone watching, it's not like I'm going to hold that short position till 9,000, right? It's, for me, it's short-term trading. So if we were to come back into this level here, I'm out. Take my profits on the shorts. I might even go long at that point. So it's a trader's market right now. When you get these type of ups and down moves, it's actually really, really good trading environment. Yeah, Ethereum's super interesting because we have this channel and you still have it. You're right at that upper level, right in here, and you're still kind of bubbling up against resistance. So that's one of the reasons why I started a little short position here in Ethereum, is just the fact that it's still struggling to get through this area of resistance right here. Now, if it does get through, you're going to head to $2,000. 2,000 was your highest pivot since it put in the low. So back in June, when it made a low of around just under 900, it had that monster rally to about 2,000. That would be your short-term resistance level on the charts. And again, that would be a level where I would add to my short at this stage. Because if you look at the charts of Ethereum and Bitcoin, and this is, I don't know if we'll see an alt rally where like sometimes that does happen where it's kind of the second leg of the move is the alts. But I mean, Bitcoin and Ethereum have just blown the alts away. And you look at like Ethereum trading at a short-term high, basically the highest point since, going back to August of 2022. And then you also look at Bitcoin here and same thing, highest. In fact, it's the highest point going all the way back to June of 2022. But then you look at something like Solana, and Solana's had a bounce, but it's not even close to the recent high yet. Same thing with Matic. Look at Matic, not even close to the high. And what that tells me is that, again, people are looking for a safe haven. It's a safe haven move. It's not a cryptocurrency move. Yeah. So at least on a technical basis, when I look at this, there's not much I can do with it. When you get these type of collapses, and again, we saw SVB, SBNY halted, and those basically were taken over by the government. So my recommendation is, if you're going to play them with the right size, so you understand if those if something were to happen in that scenario, you don't lose a ton. The only thing you can do is go to a really large time frame, and even on a large time frame, you're basically at support, but it's the last level of support. I mean, this is it. You can see right here, $21, $23 right in here. This is your low on your weekly basis. So you want to see it. For me, I would want to see this hold $20 on a weekly close. If it gets below that, then it would make me nervous. Yeah, kind of this. I mean, if you were going to compare it, this would be kind of the most similar sideways chop, where you even did make slightly higher highs, right? And I think so one of the things that people have said is you have look at this downsloping trend line, right? So then if we look at that, but then we go back to the current thing, you actually have that same sort of thing right here, right? So you could argue that you broke out. A lot of people have said, oh, the S&P broke out, right? Right here from this trend line sloping down. But the same thing is if we go back to 2008 or 2008, same thing happened, right? You broke above it, but then you kind of started to collapse. And that's my thinking, is that ultimately that's probably what we're going to end up doing on this market. Yeah, you definitely could. There's no doubt about it. And I think the unforeseen stuff is also, if you see stocks like Apple and Microsoft and these stocks really take a tumble. I mean, if they were to lose 50% of their value, I mean, you're talking trillions of dollars right there and lost value.